Hello and welcome to week 2 of the Accounting 101 course. I hope you had good luck in that first week. Now we're going into the second week, and we're going to start off kind of where we left off on one of the parts of last week's lecture. I'm going to bring up my Word document, and if you recall last week, I told you you've got to know this accounting equation. The assets equals liabilities plus owner's equity, and then the offshoot of the owner's equity is plus revenue minus expenses. This week we're going to actually start to journalize all of the business transactions and what that means and how to do that. When you begin to journalize transactions, you usually do 2 steps. You journalize them, you put them in a journal in nice, neat order, so you can easily see what happened on each day and each transaction. You can easily go back. But you also post to the general ledger. Another name for general ledger, more of a generic, I don't know if it's generic, that's not the right term, but general ledger is more the official terminology. What I'll be calling it most of the time are your T accounts. And what you see here is an example of what a T account kind of looks like and where the normal balance lies. The normal balance of any account is on the plus side. So you'll see that the assets and the expenses are the only ones that have a plus on the left-hand side of the T account. And hopefully you can see, I tried to make this as best I could. This is why it looks like a T. This is why it's called a T account. We got the account. We'll have an account title up here, and then cut it off and start putting your amounts down. And I'm going to show you examples of that in just a minute. And then everything in the middle, what I want you to remember, has a negative on the left side of the T account and a plus on the right side. So the 2 ends look alike, and then everything in the middle looks alike. Now, remember, the plus side is called the normal balance. That's one of the things I want you to get out of this. The other major item, there's 2 other more major items that I want you to get out of this. The left side of the T account, or the left side of a journal entry, is called your debit. Debit does not mean plus. It does not mean minus. It simply means left. Because if you go back up to the equation, the left side on an asset is a plus to an asset. It's going to increase the amount of the asset that you have. While a left side to a liability will decrease the amount of liability that you have. So debit simply means left, and then the right side is called your credit side. The credit. Credit does not mean plus or minus. It simply means the right side. So try your best to get your banking knowledge out of your head, and I'll explain why they use those maybe in a later lecture. But for right now, debit, when you usually think of using your debit card, you're taking money out of your account. Or if you credited your account, you're increasing it. Get that out of your head, because that is not what the actual terminology means. You are using that terminology because that's what the banks call it. The banks, they call it that for a certain reason. They're not wrong, but credit does not mean increasing an account or increasing your cash by any means. It actually, in the real terminology, would be decreasing your cash from your perspective. When you are using those terms, you're using it from the bank's perspective. And we can get into that at some other point. Then when it's finally time to say, okay, how am I going to put in a transaction into a journal, you won't find this really in any book. And these are items that I've made up, or questions that I've made up that I think have really helped my class in the past. And so I would advise you to answer these questions to help you know, well, what account one, what account am I using, and then where does that account go up or down? So in business, every type of transaction must be recorded. Now, not everything that happens in a business needs to be recorded. So just because you opened up for business doesn't mean there's a journal entry. Nothing really concrete happened. No money was exchanged. No service was provided. Just because you opened your door doesn't mean you have to journalize that by any means. Or just because you hired somebody, yeah, there's paperwork, but from a business transaction type standpoint, nothing happened. Now, when you pay your workers or when the workers do work, then something has happened. But just hiring somebody doesn't count and doesn't need a journal entry. So the two questions I need you to ask, and the first one, you always want to put your debits first. Debit is, what did the business get? Sometimes that's a little bit harder to answer than other times, but typically this is going to help you determine what the correct debit and credit should be. Everything, the rest of this class is going to hinge on your ability to answer these two questions and know where to properly put it in the T account. So this week is probably the most important week that we're going to have because everything's going to build off this. And then the second question, your credit question, is how or why did the business get it, whatever it was from number one? And we'll try to answer that. We're going to go through some examples here in just a minute to put this into practice. And then what I want you to do is after you have answered those two questions and hopefully found what account you think it is and put it into the T account, answer these last two checkpoints. Did you have at least one debit and one credit, meaning did you have something on the left side of a T account and on the right side of a T account? Now remember, I didn't say the left or right side of the equation, just the left and right side of a T account. So you could have two items in the assets being affected. It's just one has to be a plus and one will have to be a minus. Now, if you have on different sides of the equation, you would have a plus to an asset, and then you would need a plus in the liability or in the owner's equity. The only exception, though, is here in the expenses. You have to think about it that this minus in the equation overrules. So just because you have a plus to an expense, what that really does to your owner's equity when you have an expense, that's good in a way, but also expenses are you don't like them because they take money out of the business. So when you increase an expense, say like rent, that means you had to pay and you used rent. So that's going to decrease the overall what's left of the business. Hopefully you earn revenue because of that. But the minus here is going to overrule. So if you have a plus to an expense, that's really like a minus to the equation. And we'll touch on a few of those. And then the last item is, does your equation balance? Does it equal? Do your assets still equal this side of the equation? So again, you could have two over here, but they would have to cancel each other out to still equal your assets. You can also have more than two accounts affected. I'm not sure we'll actually have that this week, but in the future we definitely will. You'll have much more than just two accounts. You could have two assets and then one over here. And as long as they offset, then no problem. All right, let's go into an example to see how exactly we journal and how we put in P accounts. Okay, I'm going to bring up, I have an example for you in the resources part of Blackboard. Like I will each week, I'll have an example for you to refer back to, so you don't have to keep looking at the one that I have on the screen. Maybe we'll go too fast or whatever the issue is. So what I have up here is our list of transactions that we're going to go through. Now the only Bad thing is the answers I have are in an Excel document, so I'm going to have to go back and forth between to what this shows. What I'll probably do is I'm going to have you keep this screen, print this off, and then I'm going to assume that you're able to get to this sheet, and then I'm going to continually just have the answer sheet up in the Excel document, so I don't have to switch back and forth on this program that we use, which makes it a little tougher. So we're going to start out here with the Taylor invested $30,000 into the business. One of the other items before we get into this real quickly is I put this sheet out there for you to have in the resources. And this is an example of a nice T account sheet. It gives you the accounting equation, and sometimes you may hear me refer to these as the parent accounts. This is just any item, there's 5 of them, and then all of the accounts are going to fall somewhere underneath these parent categories. All of our expenses and our revenue items, and all the way over to our assets. So you notice cash is definitely the biggest. I have a debit and credit column, kind of like your T account, so act like this middle line here is the up and down, and then here is the over. This is our T. And then we're going to put in all of the dates, and then if something happened on that date for that particular account, we'll either show it as a debit or a credit. What you may also want to do is put the plus-minus system as well. So assets have a plus, and then on the right side they have a negative. It's kind of hard to put in plus-minus, but liabilities have a minus. And then plus. And owner's equity, minus plus. Revenue, minus plus. Expenses, plus minus. You may want to get in the habit of putting that on each of your sheets as you're working through, if you want to use a sheet at all. That's up to you. I like sometimes to work things out by hand and then post them into the answers, but that's your call. Now, you'll see here I have account receivable company number 1. You may have 2 or 3 account receivables. And of course, you'll want to keep an account receivable open for each company and for each person that owes you. Remember, receivables is somebody owes you money, and you're going to be receiving that. You don't necessarily want to put all of your receivables into one category, then you don't know who owes you what. So that's why I put company 1. If we need to add more companies, we can do it at the bottom. We may have more than just one prepaid account when we get into next week, week 3. And we may have something specific. Instead of building, it could be land, or it could be a vehicle, and we could easily just mark these out. These are just accounts that I have made up, and then knowing that we can change them when and if need be. Okay, so I'm going to pull up now the answers and go through them one at a time to this Taylor's transaction. So the first one, it told us Taylor invested, let's scroll down a little, there we go. Taylor invested $30,000 into her business. All right, so we need to begin to journalize this. And the first question we ask is, what did the business get? Well, if Taylor invested money, the business got money. And in accounting, we call that cash. And we also know that cash, you got to think, did cash go up or down? Well, for one, we just answered the debit question. So hopefully our answer will be on the debit side. But it's a good thing to check it. And remember, the assets have a debit on the left, and so do the expenses, and then everything in the middle has a debit on the right. So what you're going to have to memorize the equation along with the plus-minus system. So we have a debit. Did our cash increase by $30,000 in the business? Yes, that makes sense. And then how did I get the money? Well, if you remember back to last week, when an owner puts money into the business, we call it capital. also known as common stock. In my accounting lab, they may call it either. So just know that capital also means common stock. And did the owner's investment go up or down? Well, we answered when we were doing the what did the business get, and then how did they get it? That's the credit question. The business got the money by issuing stock or capital. So our capital did go up, and we did answer the credit question. Now, if we were looking to journalize this, and this is not a good, I'm not going to bring up a specific sheet. I guess I could. Let's go ahead and bring up a specific sheet just to journalize to show you what this looks like. So out to the side, we're going to have our, this will be our date column, and then this will be our transaction column, and then we'll have a debit column and a credit column. And we're going to keep everything in nice, neat order. So this one was transaction number 1. We didn't really have a date. We had a debit to our cash. You always put your debits first. Always, always. And that was for, let's go back, $30,000. And then second, if that's all that, we always put all of our debits first. So if you had more than one, you put it there. Second, then we put all of our credits. In this case, it was capital, also known as common stock. Whatever you want to call it and get used to it, that's fine. It doesn't matter to me. Just my accounting lab is going to use one or the other usually. When you have a credit, you always indent it, and then, of course, you put it on the credit side. And then the book will have you starting out by putting a small explanation down below to tell in real brief format what happened. So invested money into business. As you get farther along, these small little notes will end up, you probably won't do them. Because to an accountant, it's obvious what happened here. As long as you did it correctly, I'll know that if cash is on the debit, that it went up. And where did the cash come from? It came from an investment from the owner. But for right now, your homework will have you sometimes do this, putting a little explanation. Okay, let's go to transaction number 2. I'm going to pull it up so I can see it real quick and then bring it back down. Transaction number 2 was Taylor also invested a barber chair that she bought 5 years ago, valued at $6,000. Okay, so what did the business get? The business got a chair, furniture, which could also be known as a piece of equipment. And if we think about that, a chair, especially a barber chair, they're pretty expensive. They hopefully will last me more than a year. So therefore, it's an asset. So I'm going to end up putting this down at towards the bottom of my assets in what I've shown here as chair. You could call this equipment. That would be perfectly fine. So transaction number 2, what did I get? That's the debit question. I got $6,000 worth, the business did, of a specified barber chair. That's something I own and something that's going to last more than just a year. Now, how did I get the chair? Well, that's the same answer as to how I got money. I got money by the owner investing it. I also got the chair by the owner investing it. So that's going to increase the owner's value in the business by $6,000. Now let's go through those 2 check questions that I had put in the opening. We have at least one debit and one credit. It's on the credit side, the right-hand side of the T account. And I have a $6,000 plus on the left side of the equation. Here's the equation, equals. And I have a $6,000 plus on the right side of the equation. So everything balances. Here's my totals. $36,000 assets and now $36,000 on the right-hand side of the equation. And now we can go in and journalize this. We debited our share. I'm going to call it a more general term. We'll just call it equipment and or furniture maybe. Again, you can, these items, as long as we know that it's a PPE item, that's all that's really necessary. $6,000. And how did I get the furniture? Well, you can just look back to your T account. We credited our capital account or common stock. And then our brief little explanation, invested share into business. Let's do a couple more, and then we'll move on to the My Accounting Lab assignment to make sure we have this down. Okay, the third one here. Taylor paid for $900 in advertising. So the first question we asked, what did the business get? The business got the use of advertising. And then I got to think, okay, advertising, is that something that's going to last me and going to continue on for more than a year? And the answer is no, it usually lasts about a month, and then you might have to repay for more of it. If something lasts you for less than a year, we call that an expense. And here I got my expense listed, adding now into my T accounts. Our expenses, and that answers the debit question, what did we get? So hopefully this will be a debit answer, and it is. The business got the use and the benefit of advertising. Hopefully that'll help our business grow. That's why we have expenses, to hopefully help the business grow, get more revenue. Did the expenses go up or down for the year? Well, of course they went up. Expenses, 99% of the time, will always go up, unless maybe you got a refund. So expenses went up. How did I get the use of advertising? I had to pay money. So that's where I come over here and put it as a credit to my cash. I paid money to get the use of the advertising. Now, let's check our debit and credit question. Did I have at least one debit? Yep, here's my debit on the left-hand side of the T account, and here's my credit on the right-hand side of the T account. Does the equation balance? At first, you may say, uh-oh, it doesn't, because look, I got a negative on this side, and then you think, whoops, you got a plus on this side. You can't have a negative and a plus. But if you remember back, this negative here that I have in blue overrides this plus sign. Kind of like doing a multiplication. If you have -1 times +5, your answer is going to be -5. The negative overrides. In this case, this negative is going to override. So I have a -900 on this side, and then a -900 on this side. And the equation is going to balance. 35,1 equals the 36,000 minus 900, which is 35,100. And now we journal. We're going to debit our advertising expense for the $900. How did I get the advertising? I paid cash, or the business paid cash. And then we put in our little explanation. I'm going to skip down a couple and just show you how you do one that has more than one number in it. And then we'll go on to the homework. After the first day, so I'm going to do here December 5th. After the first day, the registrar rang up $500 in sales, $400 with cash, and $100 to be paid later. Okay. So what did the business get in this transaction? Well, the business got money, but we also got something else. We got a promise to be paid, which is an account receivable. So I think this is number 6. Yeah. So what did the business get? The business got cash. So that's a debit because that answered the debit question. And it also shows that cash went up, which is true. We got money. And we got a promise to be paid. A promise to be paid is an account receivable, something else that we own or have the rights to own. I have the rights to that cash that she will be paying me in 2 weeks. So my AR account better go up. I have a positive amount of money coming in to me. So now I have 2 debits. And then how did I get the money? Or why did I get the money? I got it because I did my job. I did what the business is supposed to do. And that is considered our revenue. And we have a specific account just called, and we could specify this a little bit better. Whatever the business is, I can't remember what I did, but we call it a service revenue, assuming this was a service type business. And we earned $500. But you might think, hey, wait, we only got $400 in cash. That's true, but remember the rules for revenue. You have to have received the money or have a promise to be paid. And we do have that promise to be paid here through Jamie. And then the job was complete. So that's showing that all $500 in the service was completed. You see, I had a couple extra since we started, or last one we left off. So my accounting equation, if you go through and add up all of your assets, you're going to get 36.7. And how you add these up quickly is you just add up all of your pluses and then subtract out everything on the negative side. And let me just jump to the end one, and I'll show you kind of what I mean by that. So if we were to do a final total here, I would say 30,400 minus every one of these. So, and I'll just do it the long way. Minus 900, minus 100, minus 200, minus 1,300. I'm going to have an ending balance, and notice it's on the debit side because the debit side's bigger. I have cash still remaining on my books of $27,900, a debit plus balance. Where over here, remember these are minus plus, plus being the credit side, debit being the minus, I would have an ending balance of $1,000. 1,200 minus the 200 on the debit leaves me with 1,000 left. And let's do that journal entry I had just talked about. Remember, we skipped a few, so I'll skip a little bit down here. I don't remember exactly. I think it was number 6. We had, what did we get? We got cash in the business. And we also got accounts receivable from Jamie. So I'm putting both of my debits first and then show where this came from. It came from, why did I get cash? Because I did my job, which is our revenue account. My debits of 500 equal my credits of 500. Okay, let's go into Wiley Plus now. And just a couple more almost there.